And welcome back to Wizards of the Street. I'm still with Ace Fund Manager Sridath Panwaldar of Canara Robeco Mutual Fund. Sridath, we talked about lots of things in our previous segment. Let me, if you were to summarize your investment philosophy for me, because you operate a lot of public money, what would that investment philosophy be?
So investment philosophy in a single line is very simple. That you focus on the underlying businesses and companies and forget about the stock tickers on a daily basis or in near term, because the market can remain far more irrational in near term, but it is very, very rational as you extend the timelines. So
it's a weighing machine in the long run.
So the only thing that is in control and where you can focus on is what is happening to the underlying business, both on the balance sheets and on the earnings side. So you be focused there. So that's the core philosophy for us as a house, apart from just me as a fund manager.
But let me ask you a question. A lot of fund managers will say that, of course, but markets are driven by extremes, as you well know. How do you have the patience to sit through when the market is, in your opinion, behaving irrationally?
I think, given your philosophy, you have very limited choices there. You go back to your basic default setting and say, am I actually not reacting to change in facts? So am I wrong, or is market wrong, or generally the masses are wrong? That's the decision you have to make. So every time you go back and test whether the earnings are going to play out, whether capital efficiency is going to play out, am I denying it just because it is happening in sectors or companies which you are not very comfortable with in the past, at least. And it happens time to time also, that it's not as if always the market is right, wrong and you are right. Equal number of time you are also wrong in terms of judging the changes that are happening. So you have to go back and actually test the hypothesis on facts and nothing else.
And then have the courage to sit through that.
And the courage to sit through it, which is the most difficult part, because most of your stakeholders who are not necessarily on the same plane would find it difficult what is happening in market and what you are doing. So,
but sometimes you get fired for underperformance, right? So is that a burden?
It is a burden, I think, for all the institutional fund managers. That's a pressure you have to live with. But I think over a period of time, what I realized is that if the only way any style or any fund manager outperforms is by sticking to what his basic tenets are, because there will be periods time to time where you will underperform. You can't have outperformance every year. So once you actually settle that in mind, then you can go back and focus on what you are good at, which is for us, which is selection. How can we get the selection of earnings right as many times as possible?
You know, you've obviously run through multiple stocks in your career in Canara Bank and the other places. Give me an example of what has been, you think, your best pick or your worst pick.
Okay. I'll say what has worked, what has not worked.
And I understand this is just not a recommendation. You're doing it for educational purposes.
So I think, and I'll actually largely stick to my current tenure at Canara Robeco, because then it will be relatively easy. Minda Industries, which is now called as Uno Minda, has been one of our best pick. It's almost more than a 10-bagger for us in last 7 years. And why we bought it was the change in facts, both in terms of how the management was actually moving in terms of their business strategies, and more importantly, how initially the promoter decided to actually move all his JVs and businesses which were in promoter group into listed entity at book value.
At book value,
which is very, very rare.
They're in the auto ancillary business?
They are in the auto ancillary business. They are among the largest auto ancillary players now, about 10,000 crore.
So you caught the earnings cycle getting better
We saw that basically earnings are getting consolidated at the group level.
Corporate governance
was improving significantly. And they were adding actually business segments which were aiding the growth. So both basically P&L expansion as well as the balance sheet cleaning up in a way.
And you had the courage to hold it till it became 10 bag or 15 bag or whatever it is.
We still hold it. So recommendation, this is not a recommendation to buy or sell. Disclaimer from our side.
Right.
Please consult your advisors before actually thinking even of buying or selling this stock. So this is just just for explanation
For
purpose.
explanation, brother. So Minda was a great example. Give me something that went wrong, because we all get it wrong.
Oh, I
ultimately.
typically tend to remember them more. So I can give you several examples. So the first I started actually my initial investments with non-ferrous. It looked like a great investment between 5 and 7. And I think that stock became 1/4 or 1/5 by 2010. So that's where I started. So mistakes are more clearly. Then in 2012-13, actually with my previous organization, I was holding few print media companies. And on basic principles, they always looked good. You had 15% earnings growth, 17-18% ROCs.
But a terminal
nothing wrong.
business.
Exactly. So it took me 2-3 years to realize that basically, or probably more, to realize that basically the terminal valuation is a challenge. So terminal value of the business is becoming 0. So it took more than 2 years, and basically stocks becoming half for me to learn that. So that's second.
What they call value traps in the business.
They call it value traps.
Correct.
Yeah, and then probably third would be, which I was discussing earlier also with you, was this explosive company, where for intermittent earnings challenges, we sold it off, and then it became 3-bagger from there. And when we were holding, it was already 5-bagger for us. If we had held it till date, it would have become 15-bagger effectively.
Of course, yeah. So a lot of people say that India is an idea whose time has come, the great bull market unfolding. How do you sense the next few years for India?
I think clearly time for India has come, and it would be it is of course reflective in all the parameters that you look at, be it demographics, be it the per capita where we have come, be it the advantages of democratic setup which are in place. I think rarely there are emerging markets where you have such good democratic setup as well as judiciary system.
Democratic and demographic setup.
And demographics plus judiciary system.
And a stable political system
And
now.
a stable political system,
So
which
you
is
would-
likely,
could
which is
I
likely to
force
get
you-
extended now.
Could I force you to say we're in a new bull market in India?
I am actually not a big fan of calling out markets because I feel that whether there has been bull market or bear market in India, and you have been in market for a longer period than me, every year you have 20-30 opportunities in market.
Pick the stocks.
So pick the stocks. So
Which
it's a
is what
stock
you
pickers
do.
market. Yeah, that's where I would encourage people to focus on.
Not focus on markets,
rather than
focus
getting-
bottom
yeah,
up.
yeah,
Right.
bottom up.
Good point. You know, what I'm going to focus on next is what we call a rapid fire round, Sridath. So we're going to have some fun with you. Value investing or growth investing?
I think blend.
Blend, okay. Active investing in the long run will always beat passive investing. True or false?
True, I believe that.
Okay, that wouldn't be a fun match otherwise.
No, I must explain this because I feel that passive investments, not because we as a house don't do it, but fundamentally capitalism actually came in place to allocate capital efficiently.
Right.
Passive investment is like socializing capitalism.
Right.
So at some point in time, it has to falter.
FIFA game or an IPL game? What would you rather watch?
FIFA game.
Okay, you're a football fan. The best book that you've read on investing?
So there are a lot of complex books that I have read, but I would rather stick to something that a lot of the viewers can actually read and get it
Understand.
very easily.
Sure.
That would be a little book that
little book that beats the
builds
market?
wealth
Yeah.
by Pat Dorsey.
Yeah.
Which talks about moats and capital efficiency and compounding.
Good choice. A newspaper that you always read?
I read all editorials of all newspapers.
Name one.
I have to stick to Business Standard.
Okay. Who would you rather have a drink with? Tom Friedman from the New York Times or Peter Drucker?
Tom Friedman, I guess.
Okay. If you could invite any 3 investment professionals to your home for dinner, who would they be? Dead or alive?
It will be Warren Buffett, Charlie Munger, and to balance these two guys, you will have Seth Klarman.
Oh, lovely. All 3 great value investors. The Indian promoter that you admire the most?
I think Tata's because although there is no single person, but as a conglomerate, they're the ones who have showed that you can create wealth
Legitimately and through long
legitimately
periods
with
of time.
values and integrity.
And great corporate governance,
Yeah.
of course. If I give you this sentence, the next decade belongs to this, either say country, company, or sector, what would you say?
I think India,
Okay.
clearly because there is fundamentally logical reason is growth differential of India vis-a-vis the rest of the world.
Also, that we happen to be in India, that helps, huh?
That always helps. And I think in terms of sectors, it will be both consumer discretionary and the manufacturing value chain.
All right. If I'm just 30 years old in India, which India is a young country, I'm just 30 years old, what percentage of my savings would you say I should expose to equities?
If you have leverage, just get rid of that leverage. That's the first. If you don't have leverage, I think 50% at least should go into equities.
Equities, okay. You're going to encourage your dad and your brothers to get into equities, right?
I have tried that and failed.
Okay. What is the most popular app you have on your phone that you use all the time?
WhatsApp.
WhatsApp,
Yeah.
okay, good enough. You know, Sridath, in conclusion, author Robert Louis Stevenson said, I always kept 2 books in my pocket, one to read, one to write in. Thank you for sharing your thoughts with me today.
Thank you so much for having us on your show.
We'll see you on another episode of Wizards of the Street. Thank you for joining us.